Joining me this Tuesday at the Grand Cayman Liberty Forum is no stranger to the gold industry, Peter Schiff. He's the CEO and Chief Global Strategist of Euro-Pacific Capital. Peter, good to finally speak with you and meet you.
It's great to speak with you as well. Yeah.
So let's start talking about gold and the news that emerged this morning that the ECB may purchase bullion to counter low inflation. Some saying that's what's happening, the uptick that we're seeing in gold this morning. Gold now trading above that key 1180 level. Peter?
Well, if they're going to buy more gold, which I think would be smart, because I think the price is going to go a lot higher, it's not to counter low inflation. I mean, maybe that's what they're talking about, but low inflation is not a threat. It's high inflation that's a threat. Low inflation is good. The lower the better. In fact, if prices go down, that's even better for your economy than when prices go up. So this is all a bunch of nonsense, fear-mongering. Governments want to lay a foundation for more inflation, so they're trying to get people to fear deflation. Look at Japan. Japan now is in a recession, right, officially, and they're blaming it on the higher sales tax. Well, why are they saying that? They're saying, well, higher prices hurt the economy. Well, they're saying they want higher prices. They're saying it was low prices that were hurting the economy, and now they're getting prices going up, and they don't like it. And the fact of the matter is, creating inflation undermines your economy. Japan is in a recession because the government tried to stimulate it by creating inflation. And now their answer is, well, we need even more stimulus, right? Well, now they're going to make the problem bigger.
Also helping gold right now is the news that Russia added 150 metric tons to their stockpile. You had some interesting comments on this.
Yeah, you know, a lot of people thought when gold was falling that it was Russia that was selling. Right? Oh, they're selling gold to protect the euro, the ruble. And I said, no, Putin is way too smart to sell his gold. If anything, I said he's buying gold and selling his dollars. And that's probably exactly what he did.
Now, Peter, when we're talking about gold, everyone's talking about the strength of the US dollar, how it's really a dollar story. But you say, don't be fooled by the strong dollar. What do you mean by that?
Well, the dollar isn't really strong. It's just that temporarily other currencies are weaker. I think people are worried about the yen. They're worried about the euro. And so the dollar wins by default, right? They say, well, it's the cleanest shirt in the hamper, right? But it's actually not. It's actually the dirtiest shirt in there. People just don't appreciate that yet. It's only because of the euphoric effects of our last round of QE haven't worn off yet. But I think as the U.S. economy drifts back towards recession by next year, we're going to come in with QE4, and we're going to be printing more money than Japan and Europe combined. So the people who are buying dollars right now because they're afraid of QE in Europe and Japan, they're jumping out of the frying pan into the fire.
So Peter, do you think the Fed was ahead of themselves in ending QE now?
Well, they never should have started it. Because once they started it, you can't end it. Not unless you're willing to embrace the consequences. And the consequences are QE exacerbated all the problems that the Fed was supposedly trying to solve. So the minute you stop QE, you have to prepare for the consequences. Like if you're going to be a drug addict and you want to finally stop taking drugs, you got to go to rehab. And the U.S. economy needs to go into rehab because of all the drugs the Fed shot the economy up with.
Okay, so do you think the Fed can start raising rates in 2015 as many people expect?
No, they're not going to raise rates at all. They're going to do more QE. They're going to finally raise rates, but not because they want to, but because the market gives them no choice, because the dollar is in free fall and inflation is accelerating and the Fed's back is to the wall and they have no choice but to raise interest rates and bring about a financial crisis on an order of magnitude greater than 2008.
Okay, so let's tie this back into gold now. What's your outlook for the metal? I know you've been bullish on the metal. Do you continue to be?
Yes, I'm bullish. It's hard to call the short term, obviously, and people now are trying to say, oh, Peter, you were saying gold was going to go to 5,000. It's going to go to 5,000. And in fact, I looked at some of my CNBC interviews, and I was predicting 5,000 when gold was 500. So it's not like I just started doing it when it was at 900, right? I've had that target in my mind for some time, and I think we're going to eclipse it. And I think that when this, decline is over, and it's been 2 or 3 years since gold hit its high around 1900, I think it's actually going to rise faster than it fell. Normally markets go down, they take the stairs up and the elevator down. Well, I think that gold is going to take a rocket ship back up, because I think when all the people who have been shorting gold and selling gold realize that they've got it wrong and they want to buy it back, it's just not there. Because I think the real gold, all the gold that was dumped out of the ETFs, I think it's sitting in vaults in Russia and China, and it's never going to see the light of day again. So when the buyers want it back, it's not going to be there.
Actually, 10-year anniversary of GLD today, as you mentioned, ETF. Yeah. But what do you think would be the fundamentals in place that could drive gold to those prices?
Just reality. people right now are oblivious to the fact that it's QE infinity, that all the major central banks around the world are promising inflation. Once upon a time, central banks promised price stability, and they were willing to put interest rates up to 5, 6, 7, 8% to maintain stable prices. Now they're saying that stable prices are dangerous. We need at least 2% inflation per year to be safe, if not more, and we'll keep our interest rates at zero and monetize all this government debt in order to create inflation. This is the best fundamental environment I've ever seen for gold. And also, I do believe that the dollar's days as the world's reserve currency are numbered, and when the dollar is no longer accepted as the reserve currency, what's going to take its place? It's not going to be the euro, it's not going to be the yen. I think it's going to be gold. I think the world is going to go back to gold. Alan Greenspan recently said that he thought gold was a currency, and he thought that it really had no equal. Well, he was wrong. Gold's not a currency, gold's money. When the dollar was backed by gold, when we had legitimate Federal Reserve notes where you can take them to the Federal Reserve and they would give you gold, right? Then we had currency. Currency is backed by money. Fiat currency, which is what we have now, is backed by nothing. So the world is awash in fiat currencies, and you need real money to back a legitimate currency. So to turn our fiat currencies into real currencies, they need to be backed by money. And that's going to be gold.
So how much gold do you advocate for in a person's portfolio?
Okay, well, I always say at a minimum, you should have 5 to 10% of your portfolio in gold. And you can also increase that. You can have gold stocks depending on your risk tolerance, or are you looking to preserve wealth? Are you looking to get rich with gold? So different people have different needs. But I always say that just about everybody should have 5 to 10%. And if you have 5 to 10% of your portfolio in gold, you have a lot more gold than anybody else, because most people have nothing. Most institutions, most pension funds have zero allocation to gold. Nothing.
Finally, Peter, I want to get your thoughts on the Swiss gold referendum. The results are expected next week. Do you think that this could just be a political stunt, or is there a bigger story behind this referendum?
Well, I think this is a potentially big vote. I think it's a lot bigger than the vote in the UK, where the Scottish were voting for independence. I mean, there was a lot of attention to that. And, that would have been big for the UK. I don't know how much impact it would have had here, but I think this vote potentially has a much bigger impact beyond Swiss borders. Because if the Swiss put the brakes on their central bank and basically say no to the money printing and say, look, you can't keep printing money and buying euros to undermine the Swiss franc, we demand to have some type of monetary backing, gold. The Swiss were the last nation to delink from gold. In 1999, they had 40% of their reserves in gold. Now it's down to about 7%, and their reserves have exploded because of all the euros they've had to buy to monetize European debt. And the Swiss were smart enough not to join the euro currency from inception because they didn't want to give up the Swiss franc for an untested euro. And now they've adopted the euro de facto because they've pegged their currency to a sinking ship. So I think the Swiss want to get off that ship, and they want discipline, and the bankers are resisting it, the politicians, because of course they want to print money. They don't want to be disciplined by the gold standard, but hopefully the same Swiss electorate that was smart enough to reject the world's highest minimum wage will vote for a 20% gold backing. And this could be a game changer worldwide, not only good for the price of gold, even to the extent that they try to adopt it slowly. It's still a game changer. And if the Swiss people do this, maybe other countries will do this. And if the Swiss franc stops falling and starts rising because of this, and the benefits, you can see the benefits in the Swiss economy, more people will understand that a strong currency is good, not a weak currency.
Peter, you're also a keynote speaker here at the Grand Cayman Liberty Forum. What was your message to investors as we end the interview? Final thoughts for investors watching.
Well, just not to believe, all the hype about the U.S. recovery and about the rate hikes that are coming in the end of QE, because the Fed can no more end QE3 than it could end in QE2 or QE1, right? The reason we've had all these rounds of QE is because they don't work. But it's not that they just don't work. They actually make the problems worse. So every time you do QE, you're guaranteed to have to do it again, only on a bigger scale, right? It's like trying to put out a fire with gasoline. So I think this could be the last round. This could be the fatal dose that we overdose on. And I want people to take advantage of this last window of opportunity to sell their dollars to the fools who are buying them, to pick up all this gold that they can below $1,200 an ounce, right? And reallocate their portfolios to reflect reality. not this fantasy that everybody is living in.
On that note, Peter Schiff, thanks so much for joining us on Kitco News. It was a pleasure.
Sure, my pleasure.
And thanks for watching our coverage here from the Grand Cayman Liberty Forum. We'll have more for you throughout this Tuesday. In the meantime, you can email us newsfeedback@kitco.com. Thanks so much, Peter.
Sure.
It was a pleasure.